Advanced auditing. Good morning to everyone. I'm talking about advanced auditing. In advanced auditing, I'm talking about SRE 2400. Engagement to review historical financial statements. Historical financial statements. SRE 2400 with the productions, the practitioner's responsibilities when engaged to perform, review a historical financial statements. When practitioner is not the auditor of the entity financial statements. Step 1. The practitioner responsibilities when engaged to perform in a service. Okay, the practitioner, the practitioner responsibilities when engaged to perform a review historical information, statutory, when the engagement in the practitioners is not auditor if the entity financial statements. First introduction. Conclusion in review. The practitioner expresses a conclusion that enhances confidence of intended users about the financial statements prepared in accordance with the financial reporting framework. A type of framework, a financial statement may be prepared using general purpose financial statements framework, a special purpose financial framework. Hi. Somebody said hi, I said also hi. See, nature and conclusion. The practitioner conclusions is based on obtaining the limited assurance. How it is going? Going well. The practice nature of conclusion. The practitioner conclusion is based on obtaining the limited assurance. The report includes a description, review, engagement, clarity. Okay. And procedures performed, the practitioner perform inquiry and analytical procedure to obtain standards on auditing evidence. Okay. About the procedure believes that the financial statements may be materiality misstated. They will perform additional procedure. Okay. Introduction for SRE 2400 engagements to review historical financial statements. Okay, next. Limited obtained and analytical procedures are free from the material misstatements. Okay. Report on financial statements as a whole. Report on the financial statements as a whole and and communicate findings as required. Good morning to everyone who watching my YouTube channel. I am talking about advanced auditing, which is a forming part of CA final syllabus. And in that, I am talking about SRE 2400 engagement to review historical financial statements that I am talking. Objective of 2000 SRE 2400 obtained limited assurance. The practitioner aims to obtain limited assurance through inquiry and analytical procedures to determine the report as required by SRE 2000. If limited assurance cannot be obtained and modified conclusion is insufficient, the practitioner may either disclaim the conclusion in the report or withdraw from the engagement permitted by the law or regulation. They are not able to give, they are refusing, and you are able to withdraw, law is permitted, then better to withdraw. Okay. Now, see, compliance ethical requirement requirements, the practitioner must comply with relevant ethical requirement including independence. The engagement partner is responsible for the overall of the review engagement. Understand? See, ethical requirement, the practitioner must comply with the relevant ethical requirement, including independence. The engagement partner is responsible. See, ethical requirement, the practitioner must comply with the relevant ethical requirement, including the independence. The engagement partner is responsible for the overall quality of the review engagement. Okay. The factors affecting notebook. దేవుడు దేవుడా 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 టెస్ట్ కూడా అర్థంలో మర్చిపోయిన పడలేదా. Dear friends, I'm talking about review engagement standards. The review engagement standard, one of the review engagement standard, SRE 2400, I'm speaking. SRE 2400, I give an introduction, I give an objective. Now I'm talking about compilation of the ethical requirement and the rest of like what things were there, I'm talking on that. See, basically the compilation with the ethical requirement, engagement level, quality control, ethical requirement, the practitioner must ethical comply with the relevant ethical requirement, including independence. The engagement partner is responsible for the overall quality of the review engagements. Okay. And the factors affecting acceptance, the factors affecting acceptance and continuance of the client relationship. No rational, the practitioner is not satisfied that there is a rational purpose for the engagement, such as scope limitations or inappropriate associations with financial statement. If a law or regulation requirement requires an audit, then review engagement is not appropriate. Review engagement not appropriate if the practitioner believes that review engagement is not suitable in the given circumstance. He may recommend another type of engagement. The audit compilation. no compliance with ethical requirement. The practitioner believes shall not act. The practitioner is not satisfied that there is a rational purpose for the engagement, such as a scope limitation or inappropriate association with the financial statement. If a law or regulation requires an audit, then review engagement is not appropriate. Review engagement is not appropriate if the practitioner believes that a review engagement is not suitable in the given circumstance. He may recommend another type of engagement audit. Somebody said, "Oh, okay, thank you." Guys, good morning. We are talking about auditing, and who newly joined, you just please like my channel and like my video, and then subscribe, and then you just comment. Okay, yes, you're only one. I'm just wishing. Good morning, Mr. AID and love giving something name. I don't pronounce that name properly. Okay, let's go talk. See, non gives ethical requirement, including independence, will not practitioner is unavailable, unreliable. Doubts about integrity of the management. The practitioner has doubts about integrity of management, which could affect the proper performance review. Limitation of the scope of the engagement. My dear friend, the practitioner has a doubts about integrity of the management, which could affect the proper performance of the review. The limitation and scope of the management. If management are to those charged with governance, a limitation on the scope that could lead a practitioner disclaiming a conclusion on the financial statement. Understand? Understand, guys? I hope you understood. Next. The practitioner for accepting a review engagement. The following points to be considered prior to accepting a review engagement: acceptability, financial reporting framework. The practitioner must determine if the financial reporting framework used is acceptable. In the case of special purpose statements under management responsibilities, management must agree to its responsibilities. Prepare financial statements in line with applicable financial reporting framework. Okay, guys. Anybody doubt? You just chat me. I'll answer. Otherwise, you can call me. My mobile number 9677205265. This is a people's advocate, and the mission and who are marginalized people to support them into the stand before the court of law and protect them their rights from where their law is affected. Let's see. The preconditions accepting review of engagement. The following points accepting review engagement. What are those? The practitioner must is acceptable and intended users. Management responsibilities. Management must agree to its responsibilities, prepare financial statements in line with the applicable financial reporting framework, ensuring fair presentation, establish necessary internal control to ensure financial reporting framework is to be considered prior to accepting review engagement. Okay, the acceptability financial reporting framework. The practitioner must determine if the financial reporting framework used is acceptable. In the case of a special purpose statement, understand the purpose, intended uses. Okay. Now, the management responsibilities. Management must agree to its responsibilities, prepare financial statements, prepare financial statements in accordance with the applicable financial reporting framework. Okay, guys, ensuring the presentation. Okay, establish necessary internal control to ensure financial statements are free from material misstatements, fraud, or error. Provide the practitioner with access to all relevant information, records, documentation, etc. Additional information the practitioner may request. Unrestricted access to relevant personnel for obtaining evidence. The practitioner satisfaction. If the practitioner is not satisfied with the preconditions, he must discuss the matter engagement. If issues cannot be resolved to the practitioner's satisfaction, they must not accept the engagement unless required by law or regulation. Okay, guys, understanding. If accepted as per law and regulation, the review report shall not mention a compliance with SRE. SRE means what? The standard relating to review engagement. Post acceptance issues. If presentations do not present after engagement acceptance, the practitioner must discuss the issues can be resolved. Determine whether continue the engagement. Okay, guys. Okay, guys. Understanding in the terms of the engagement. A prior performing the engagement, the practitioner must agree on the terms of the engagement with the management to those charged with governance before starting engagement. Written agreement, the agreed terms must be in written agreement like engagement letter or other form. recurring engagements. For recurring review engagement, the practitioner must assess whether circumstances like changes in acceptance considerations require revising the terms of the reminding existing terms of the management to those charged with governance. What somebody asking? No, I don't answer that kind of questions. Great. Changes in terms of the engagement. So, a written agreement, the agreed must be in written agreement like engagement letter or other form. Recurring engagement, for recurring review engagement, the practitioner must assess whether circumstances like changes, acceptance considerations requiring revising the terms of the remaining existing terms of the management or to those charged with governance. Change in terms of the engagement, the reasonable justification, the practitioner must not agree to change in terms unless there is a reasonable justification. If asked to change the engagement to one with assurance, the practitioner must evaluate whether it is justified. A new terms in writing. If the terms changed during the engagement, the new term must be agreed upon the recorded in writing. As one guy is telling that, sleep, bro, nobody is listening. See, my dear friend, I am teaching not because of you. It's my passion. Whether you're listening or not listening, whether watching or not watching. My passion, I need to fulfill. It's my goal, no. My goal is the morning 4 a.m. to 9 a.m. No, not 9 a.m. 7:30 a.m. is the target is auditing subject. And 7:30 to 9 direct tax. 9 to 9 a.m. to 2 p.m. advanced financial management and 2 p.m. to 8:30 p.m. financial reporting. 8:30 to 9, 9:30 direct tax, 9:30 to 10:30 direct tax. This is what our daily life. During the course of our daily life, my dear friend, I'm not mad. By teaching myself and what I want to say, so what can I do? Okay, you just silent and leave this. You don't see. If you're not like you don't watch this. That's it. Okay. So okay, leave it above. First, my target is to complete the review engagement standard. Okay, once this is finished, we'll open the new standard, which is enjoyable standard, and which you can enjoy. That standard will make you to learn something. Okay, let's start. The change in terms of the engagement, reasonable justification. The practitioner must not agree to change, ask to change the engagement to one with no assurance. The practitioner must evaluate whether it is justified. New terms in writing. If the terms are changed during the engagement, the new See, if the practitioner must not agree to change the terms unless there is a reasonable justification. If asked to change the engagement to one with no assurance, the practitioner must evaluate whether it is justified. New terms in writing. If the terms are changed during the engagement, the new terms must be agreed upon and recorded in writing. Performing a review engagement after acceptance determine materiality. The practitioner must determine materiality for the entire financial statements and apply if designing procedures evaluating results. The judgment on materiality is the same regardless of the level of assurance in the conclusion. Okay, friend, the practitioner should revise the materiality amount for the financial statement if a new information arises. Okay, and the obtaining understanding of the entity, the practitioner must gain an understanding of the entity's environment and the financial reporting framework to identify potential areas material misstatement in the financial statements. The moment you understand its environment, the moment you understand the financial reporting framework, structure of the organization, then you can give better your view. You can do better way of audit. You entered into the financial organization, you entered into this organization, you entered into the company. You must understand its environment and you must understand structure of the organization, risk associated with the structure of the organization. Because risk is universal. Risk is universal. Everywhere risk. The moment you understand the structure of the organization, you are able to evaluate better, assess the material misstatement existence is where, how to handle, how to remove the risk. So that it's a primary criteria for accepting engagement and to perform is a better manner, best manner. Okay, okay, guys. Now, designing, performing, the design and performing procedures through inquiry and analytical procedure to gather a sufficient evidence for a conclusion. The practitioner should perform inquiry and analytical procedures to address all material items in the financial statement, including disclosures, to focus an area where misstatements are likely. The procedures should be designed to meet the objective of the engagement. He may perform other procedures is efficient based on engagement circumstances. And my dear friend, who are watching my YouTube channel, I would like to bring to your kind notice what we are talking. We are talking about the review engagement standard. What is the standard? The standard is auditing assurance standard. In auditing assurance standards, one of few of them like review engagement. In that review engagement, I am talking about SRE 2400. Okay, guys, I am talking about SRE 2400. We are in the middle of the standard because the most of the standard already we talk. Now, inquiry. Inquiry involve seeking information from the management and relevant persons within the entity. Key inquiries may cover first accounting estimates, related parties, significant, complex, or unusual transactions, subsequent frauds, and subsequent events that efficient the financial statement, management going concern assessment, event events casting doubts on going concern, contingencies, commitments, obligations or material, non-material transactions. The practitioner may inquire about non-financial data if relevant to the engagement actions taken at meeting, owners, governance committees affecting financial statements disclosures, communications from regulatory bodies, matters arising during the course of other procedures, evaluating responses, evaluating responses. Subsequent frauds, subsequent events that affect the financial statements, and management going concern assessment, events casting doubt on a going concern, contingencies, commitments, obligations, contingencies, commitments, and obligations are material non-monetary transactions. Inquire, events casting doubt on going concern and contingencies, commitments, obligations are material and non-monetary transactions. Inquire non-financial information. The practitioner may inquire about non-financial data if relevant to the engagement, actions taken at meetings, owners, governance, committees, affecting financial statements disclosures, communications from regulatory bodies, matters arising during the course of other procedures, evaluating responses. The practitioner should assess reasonableness and consistency of the management responses in relation to the results from other procedures, acknowledge the entity. Analytical procedures, the practitioner should ensure that the data from the entity accounting system is adequate for performing analytical procedures. Why inquiry and analytical procedures are important? The importance of the inquiry provides evidence about management intent, often being the principal source If information on management intent is limited, the practitioner may look at past history of the management actions, reasons for change the course of action, and ability to pursue, to choose the course of action, and professional skepticism is essential when evaluating management response to identify the possible material misstatements. Possible material misstatements. Dear friends, good morning to everyone. Okay, okay, guys, take 1 minute. Just 2 minutes break, then we'll continue. Okay, guys, let's start. Importance of the, first of all, why inquiry analytical procedures are important. Side heading. Importance of inquiry. Inquiry provides evidence about management intent, often being the principal source. If information on management intent is limited, the practitioner may look at past history of the management actions, reasons for choosing a course of action, ability to pursue the chosen course of action, professional skepticism is essential when evaluating management responses to identify possible material misstatements. Enquiry helps update the practitioner's understanding of the entity and its environment, identifying areas where misstatements may occur. Importance of analytical procedures. It helps to update the practitioner's understanding of the entity and its environment, identifying areas of potential misstatements. It helps to identify inconsistencies, variance in the financial statement, such as trends, values, or norms. Example, key performance indicators. It provides corroborative evidence for inquiries, analytical procedures already performed. It serves as additional procedures if the practitioner suspects misstatements in the financial statement. Various methods can be used in analytical procedures, ranging from simple comparisons to complex statistical analysis. Evaluating financial information for consistency with the expected values and developing exceptional based on relevant sources such as industry information. Good morning to everyone. Guys are listening. You can comment in comment box whatever you feel, whatever you have doubts. I am talking here. Review engagement standard SRE 2400 standard. Which standard? SRE 2400 standard. I'm talking SRE 2400 standard. Okay, guys, let's move. Various methods can be used in analytical procedure ranging from simple comparison to complex statistical analysis. Evaluating financial information for consistency with the expected values, developing expectations based on the relevant sources such as industry information, specific circumstances, related parties, the practitioner should stay alert for arrangements information that may indicate related party relationships, transactions not previously identified or disclosed by management. If significant transactions outside the normal business course are identified, the practitioner must inquire with the management. The practitioner must inquire with the management about the nature of these transactions, related parties involved, and the business routine. Okay, friend. Now, fraud and non-compliance with the laws and regulations. If there are indications of fraud or non-compliance with the laws and regulations, the practitioner must communicate. The practitioner must communicate this to appropriate level of management and request management assessment of the effects of the financial statements. The practitioner must consider the practitioner must consider how management assessment of fraud or non-compliance affect the conclusion of the financial statement. If there is a need during the review, the practitioner must assess the entity ability to continue as a going concern. If concerns arise, if concerns arise, inquire with management about their plans and whether these plans are feasible to address the going concern issue. Evaluate management responses and determine if the financial statement should continue to be prepared on a going concern basis, or if there are materiality misstated. Consider management responses to all relevant informations gathered during the review. Use of work performed by others. If the practitioner relies Good morning to everyone who are watching to my YouTube channel. Now, see, going concern is one of the important element during the audit. During the review, the practitioner must assess the entity ability to continue as a going concern. If concern arise, inquire with the management about their plans and whether these plans are feasible to address the going concern issue, and evaluate the management responses and determine if the financial statement should continue to be prepared on a going concern basis or if they are materially misstated. Consider management response. Consider management response to all relevant information gathered during the review. Use the work performed by others. చాలా పెద్ద స్టాండర్డ్ అబ్బా ఇది యూఎస్ స్టాండర్డ్ అబ్బా My dear friend, give me 5 minutes break. I would like to come back again. Otherwise, I will do one more video, second part of the review engagement standard. Just give me 5 minutes break. Otherwise, I'll do within 10 minutes one more video.